Okay, so now I'd started the recording so that when we're done with this, I'll send it to both of you.
That'd be great.
So what we're doing here, we're talking about the range trader, and that's the key at the moment of where, so range trader, you're looking at a 30-minute chart. That's all it is. You can do that on any of your platforms. There's no special ninja, nothing, anything like that. What you're looking at, and let me get an arrow up here. Um, okay. So we're looking at a 30-minute chart. These are 30-minute candles, and we're typically looking at, well, let go there. This thing's kind of a slow-mo minute. What we tend to do is we first look back from the current trading session, whatever that is, whenever you're coming to start your trading day. You could be doing that early morning, you could do that late at night, you could do it whenever. The point of it is what we do is we look and say, okay, immediately, we're looking at the 30-minute chart and we're looking at price and where is price in comparison to prior day activity. Okay. Yesterday was a holiday, so we had basically a little half day of trading. So it's a little bit different on a holiday, but it doesn't matter. We can still look at some things and say, okay, where are we? All right. So your first thing that you're looking at is we look at on the range trader, we look at price, and price is trading right now at 50,524. The first thing that we look at is where is T line? Rod calls it the T line, and T line is a 233 EMA, exponential moving average. Everybody understand that? What the
Yes.
EMA is, SMAs, all that stuff?
Mhm.
Yep. Okay. So typically we're looking for where is price compared to that line, and that gives us our first criteria of what are we trading in, a bullish or a bearish or a neutral pattern. Okay. Well, as price is coming in right now, price is coming in, it's been trading over the T line. So it's been basically holding at a neutral pattern this afternoon. That makes sense?
Yep.
All right. So that's the first criteria. I mean, we could say it's in a little bit of a bearish mode because it's above it, but technically, I mean, you're bearish or you're bullish, neutral. So we're basically a kind of just neutral, finishing the day out here, kind of in a neutral pattern. Okay. The second criteria is we look at price in comparison to yesterday's range. Yesterday's range, this green bar here for me on my chart is showing me prior day low. So you can see it started over here on the session on the overnight session for the holiday starting Sunday night.
Yep.
And then here, the prior day high. Okay. So currently, price is in a neutral outside day down. All right. Make all sense? Everybody got that?
Yep.
Okay. So there's four key levels that we're really looking at when we're looking at some levels immediately as a day trader, especially in the morning before as the market is opening up. We're looking at price compared to where the T line is. That's our first level of saying, okay, if it comes into T line, that's a tradable level. The second level is prior day low and prior day high. Okay, so that's the fourth one or third one. Okay, and the fourth one is looking at prior day point of control. We understand volume point of control.
Not as much. I understand it fairly well because I've studied that with other people on the in.
Yep, sure. Yeah. Volume profiling.
But
Jared, do you get that?
basically,
You understand that a little bit?
no. Yeah, basically, point of control is if you're looking at the histogram, it's the widest point of the histogram.
Yeah, yeah. What happens here, and that was Rod was talking about that this morning. I think there was a question asked about it this morning as well. Jared, what we're looking for is every session, there is a, you're looking at every level that the price traded during that session. And the histogram that Paul's talking about is how many orders, how much volume was put in at that price point. Okay. And the highest point, the most volume at that price point becomes the volume point of control, meaning that's the highest point of volume traded for that session. Okay. Does that make sense?
Yeah.
My That's funny. My Google's talking to me and telling me it's time to go take a walk and get away from the computer. Anyway, sorry. Okay, so we understand that?
Yep.
Okay, so point of control today for the Dow, we started up here overnight, and then the morning session started right here around 50,883, and then proceeded to break down to the low of day, and then it continued breaking down, outside day down, and then it found a level of support right here. Okay. When we break outside of yesterday's range, what we tend to do is we tend to say, okay, so let's just do this right here. As day traders, we look for this right here. We look for where is today's session and what happened yesterday. Okay. So when price moved outside of yesterday's range, moved outside and dropped below this, now there's nothing, we don't see anything in yesterday's level here. So what we have to do then is look further left to say, okay, this is Friday's activity. Friday's point of control was here. Okay. So if we come across there at 50,677, you can see right here, price moved down and kind of shot back up a little bit. It bounced off of that level a little bit and then kept proceeding to fall further down. So it found a little bit of support here with the wick, and then it kept going, kept moving down. Okay. We look over here and price moved back to where Friday opened. It moved down to this level, moved to that low of day there, or the high of Thursday, or that'd be the high of Wednesday, excuse me. And then it found support here and leveled off for the rest of the session. Okay, Paul?
Yep.
So what we're looking for here as range trader every morning, and this is where Rod will open up. He'll look at like 5 or 6 different assets, because what you're looking for is saying, okay, which market is the most tradable and ready to trade and why? Okay, that's what he's doing. Now we are trading either one or two assets pretty much solely, so we don't care about the other ones. But let's just say that we came to the market and said, okay, we haven't looked today at we haven't looked at let's say crude oil. Okay. So did anybody look at crude oil today?
I didn't look at it today. I do look at it often.
Every once in a while? Yep.
Yeah.
Okay.
Just on
So let's go ahead and we're going to look at range trader on crude oil, and I want you to tell me kind of what you see based on the criteria that we talk about. Okay. So I'm going to bring up crude oil right here, and we'll bring it up to the current session here. I'll make it bigger so we can kind of look at it. Okay, so based on the criteria that we look at, that you hear Rod saying in the room and things like that, where is crude oil right at this moment?
Let's write it point of control.
Okay, so when Rod comes in and he looks at the market, what does it do? And just said what we went over. The first criteria, we were looking at T-line and we were basing some information off of the first trigger is what? The first trigger is, are we above or below T-line?
We're below.
Okay, and that indicates what?
The outside day down.
No, not yet. First criteria, we're looking at above or below T line, and if we're below T line, that means that the Bulls, it's a bull, or excuse me, the Bears have a little bit more of an advantage. It's kind of like the Bears have home court advantage, like a basketball game. Where at their gym. They've got the edge a little bit. If it's under T line, if it's above T line, it's then bullish. Okay, so Rod will first say, right now it is in a bearish. That's the first criteria: bearish or bullish based off of T line. Okay, the second piece of information is, Jared, you were there, you were on it. Okay, now we look at where is price compared to yesterday's range.
Yeah, we're above it.
Okay, let's kind of look at, it might be hard. It's kind of overlapping right here. The high of yesterday, there's this little red dotted line on my chart right there.
Oh.
You can see it right there.
Mhm.
Okay, so is price inside or outside yesterday's range?
It looks like it's inside, right?
There you go. Yep.
It's around.
So right now we're in a bearish inside day. Okay, so that's criteria number two. Criteria number three. Criteria number three is looking at the overall, the current session pattern. Are we to the higher side of yesterday's range, or are we to the lower side of yesterday's range?
Higher side.
Okay. So when you hear in the morning, you hear Rod looking at a particular market and he says, okay, hey, let's take a look at the Dow. The Dow's sitting in a bearish inside day up pattern. Now you know what that means, right?
Mhm.
Yep.
Okay, three criteria: T line first, inside day or outside day from prior day range second, and then third, where is it trading currently compared to yesterday range?
Okay, I do have a question.
You bet.
I thought inside meant that the range was inside yesterday's range, but that's not what it means, is it?
Well, yeah, you're looking at current price action. Yeah, the where is the current price happening right now at whatever time you look at it, because it
Yep,
can move during the day, right? I mean, it
right.
can move outside day up, like it did a little bit right here. In fact, it did this, the crude oil did this here this morning. It came up, the market opened up, and then it traded outside day up for a little while. And then it fell back inside day up for a little bit, right?
Yep.
So as long as the day is still active and we are active for another 20 minutes for this session, I mean, it can still move outside day up or finish the day outside day up. That makes sense, Paul?
Yes, it does.
Yeah, perfect.
So
All right,
with
what other questions on range trader are we looking for?
that, I would, I see where he puts the trades in the morning on the range trader, but I want to. I guess if I didn't have him, I wouldn't know where to put those trades. So
Well,
with
I mean, in short order, you do this a couple days in a row, and I'll make sure you know when you figure it out. I mean, you'll dial it in. It's not. I mean, it becomes really easy
yeah, I know this
as
isn't.
you.
It's just understanding.
Yeah, no, exactly right. I mean, it's just repetition. I mean, just like learning how to play basketball or learn how to play golf, right? You start to learn the course. You start to kind of get a feel for where things are, what a par four looks like, a par three, whatever, blah blah blah. Same idea. So let's go back to the Dow and let's say y'all traded the Dow. What did you trade the Dow mostly today? All right. So let's look at the Dow real quick. Now that we know this information, Jared, where is the Dow currently right now?
Oh, it's
I know it's hard to see. I apologize for. Let's see if I can make it a little bigger for you.
so it's bearish. It's outside day down, right?
Okay. There you go. The price is a little bit above T line.
Yes, it's above T line.
So it wouldn't be bearish. It would be,
Oh yeah, bullish. Sorry,
that's okay. It was
I
just,
guess I was looking at the previous. Oh, see, okay. I think I'm looking at today's. I was
yeah,
looking at
this is to
today's
this block right here from starting right here. This started today's session. This started today's session at, I guess 5 o'clock my time, 6 o'clock your time.
high. So we're
No,
above.
4 o'clock your time. 4 o'clock. Excuse me. Yeah, 4 o'clock your
Thinking
time
we're above
yesterday.
T line. Oh, we're inside because you're looking at yesterday's high and low.
No, here's yesterday up here. This green line is the low of yesterday. Yeah, this is my chart is this. Let me draw that for you so I can help you. Okay, you see this green dotted line, and you see this red dotted line right there, right?
Mm-hmm.
Okay.
Just
This is yesterday's range from low to high. Now, this is if we move this bar, you can see right there's that little green wick right there.
Mm-hmm.
That's yesterday. That's the high, and then the low was right over here. See it? There's the low of yesterday, and there the wick up here is the high.
Okay.
So what they do on my chart is I have it show me a line of where was yesterday's high, indicated by this red line up here, and show me where yesterday's low is right here with this green line. And you can do that on your chart, whatever platform you use. It's typically called prior day high, prior day low, and prior day open and prior day close. Typically, it's an indicator, just one indicator to show you all three or four of those levels.
Okay, so then have you telling me that we're outside day down, right?
Correct. Currently, we are in a neutral, bullish neutral. I mean, we're sitting close to T line. So we're above it. So you could say bullish a little bit, but it's running out of bullish gas, right? So it's bullish neutral, outside day down. Okay. So what does that tell us as if we were looking to get ready to trade for today or like right now, what would that feeds us some information that we want to know is okay, right now, the price has been for today's session, it started way up here, started up here today, and then it's made its way down and it's kept moving down. So it's been trending down all day. So are we looking to take an immediate long? Maybe, maybe not. Now, if we're at a level here lower where if we come back down into this level here where it looks like we have seen the buyers support this level down here at the bottom, we could put an order on the line down here, down around this level down here and say, okay, we could buy, we can put what we call orders on the line. We could put an order down at this level based on where it's been and where it was supported at. And then we could also buy maybe then if we wanted to, if we were setting up for the session, I mean, we're not, but if this was the AM morning, we could look at this and say, okay, our first long might be at the overnight low here, whatever, or the session low. And we could end up, this is defaulting to two. We wouldn't do two, we'd do one here. And then we could also look at this prior day levels over here on the range trader, the 30-minute chart, and say, okay, there's some levels right around here, 50,276. So we could even pick up another, if we wanted to, we could pick up another inventory right here. And this would be doing what Rod typically calls peppering the books on the range trader. Okay. Same thing here on the range trader. Based on where things are here, okay, your natural level of looking at up here at the high of day of yesterday, that would be a level for us to sell. That would be an area of interest to sell an order up at this level.
Is purple the high of the day?
Purple here is the close of yesterday's session. But also this yellow line here is the POC, point of control, for yesterday's half-day session. That's so when we're looking at range trader, we're always looking at T line. We're looking at low of prior day, high of prior day, and point of control of prior day. Because those are typically levels where there will be a battle of either shorts, looking to lean up against it to short that level back down, or levels down at the bottom looking to short that back towards the middle. All right. How are we doing on range trader?
What I think I'm coming to understand is that range trader does not have the same with stay in your lane. At least the edge trading is somewhat it tells you where to put on your numbers and where to take them off exactly. Where to enter, when to take them off. With edge trading, you put them on at minus or plus 2. You take them off at minus or plus 1 and at VWAP. And you laid out a really good plan for stop losses, which I love. The same type of thought process does not exist with range trader. Is that correct?
It depends. It's look where my arrow is right here. Okay. You see it here on the 30-minute chart?
Uh-huh.
Okay. Now, this arrow is right here on the stay in your lane. This is a micro view of the Dow, and that's the same arrow. Okay. We got that? That arrow here is this point right there. What that's good to know is we're looking for strength of signal. We're looking for, okay, we're down in the bid zone on the stay in your lane, and we're at near a low of day. So if price were to come back down here and come into this low of day, we would be down in the bottom of the bid zone, and this would be a high probability to take a trade based on both views. This view is we would be putting us near the low of day. So you can see here the low of day is right there on the range trader, and look where it moved it to, low of day, right? So this gives us a strength of signal that says, okay, if price were to, we know it's, the end of the session coming in here in about 12 minutes. But let's say if price action was to move its way back down here, this would be a perfect level to go long, or even, have a long here maybe at the low of day, or definitely having an order on the line at the -2.
Would Rod do both? Seems like he's done both.
Maybe. Yep. Because Rod would be looking and saying, okay, going, okay, we're coming into the low of the current day session. Sometimes he'll put in maybe a line that says, okay, I'm going to put an order 10 or 15 or 20 points lower than the low of day as my first entry, and then I would pick up maybe another one at the -2. Or it depending on what price action's doing, whatever all the other markets are doing. He might say, I don't want to get in here early at the low of day, but I'll definitely put an order on the line down here at the -2s. And you're looking at this view here, and you're knowing where you are on the range trader. So you're doing both, Paul. You understand that?
Yeah,
Because this is all the same chart. So it's giving us two different viewpoints. So think about this like a kind of like being in the cockpit of a plane or looking at the dashboard of your car. So the stay in your lane's given us a more, it's given us a video camera picture kind of a close up of what's going on. The 30-minute chart's giving us a zoom out view. For a day trader, we're only zooming out 30 minutes. For swing traders, they swing out and go out to a 1 hour or to a 4 hour or to a daily chart looking for trends based on how the price action's doing it. But it's all still the same asset.
How do you determine the bid zone? I've seen them drop, but I didn't understand how we determined it.
The bid zone on the range trader?
Yeah.
Okay. I'm gonna pick the Dow. We're gonna move off of this. We're gonna go to a different day so we can just kind of randomly do some stuff here. Okay, so I'm gonna go to okay, this day right here, May 19th. Okay, we're coming into this is pre-market. I'm gonna open it up a little bit here. Let's see. Okay. All right. Let's assume that this is coming in the morning before the trading session happens. Okay. So price is sitting here at 49 at the end of this candle, 49,675. Okay. So we're coming into pre-market before the morning session. Okay. Now, with price being at the top of this candle right there at 49,675, Jared, what if we're looking at what we're taking a snapshot of the window, where are we at the moment? And then yeah, and so what are we looking for first? What's our criteria? What are we looking for first?
The T line?
Okay, where's price? And price would be right here at 49. Where's price compared to T line?
Below it.
Okay, so that's our first criteria, and we call that what? We either have bullish, bearish, or neutral.
Oh, so that's
bearish.
we're slightly below, so bearish.
There you go. Okay. So right now, at this moment, looking at this snapshot of window, it is holding in a bearish. Okay, that's our first criteria. What's our second criteria?
Hawk, or is it?
The highs and lows previous day.
Yep. And so price is right here. Where is it based on previous day?
Like right there.
Well, for the previous low, it's above and it's a little bit below the previous high.
Okay, so that is based on what we've been studying right now and working on. We'd call our second criteria price is either one or the other based on yesterday's range. It is either inside or outside. So price is inside or outside yesterday's range.
Inside.
That's an out loud question I'm asking you.
Can you hear me?
I didn't hear you. I'm sorry.
Inside.
Okay, perfect. Yeah. Well, I think you got your mic off. Yeah, which is fine. Y'all might be echoing if y'all were. It doesn't matter. Yep. Yeah. So you're sitting at a bearish inside day And then based on the price action, looking at yesterday's POC, looking at where the price is, where is price compared to this quadrant? Let's say that we can carve it up in 25% quadrants. Where is price currently at
Or just
in
slightly
the
higher.
quadrant of yesterday's range?
It's
Up, down,
in the-
neutral? Yep. So we're looking at a bearish inside day up holding pattern where this price is currently. Make sense? Okay, now the question is on the range trader, what is bid zone and offer zone? That's what you were asking, right?
Yeah.
So we walk back when we say, okay, we're gonna draw a bid zone or an offer zone. The bid zone is always at the low of day. So you're looking at the low of yesterday's range. That's typically the start of a bid zone. You could look here that we started way up here overnight off of the low of the day. So the natural bid zone, this is always an area of interest, is the low of the prior day. So what Rod, you'll see him do is draw in a rectangle here. He'll put in he kind of draws it and he'll click it as a bid zone. It's just a template and it goes to green. Okay. So if price gets down here at any time in the session, we're looking to go long. Okay. This is on the extremes of yesterday's range. Now, we could think about also going long here, somewhere in here, based on some different things of yesterday, but we're not, this is us looking at it immediately based on prior day action. Okay, now what we do on the offer zone, which is where is our first area that we're interested in selling, and we would draw this in on the range trader. You'll see Rod draw this in, and it'll come into here. And he's looking at the high of day. This is high of yesterday, right here, this line. And you could draw it all the way up here to the high of the prior day. Well, that's a lot of room. I mean, that's over 200, 300 points. So you could kind of look at this R1 being kind of an area here, but this is all discretionary based on you starting to get an idea of where you want to be with this. But this is here. This would be what he calls the offer zone. And this would be an area of building inventory to sell back to the middle. Okay. So now let's forward. We're going to forward by candle, 30-minute candles, and see what happens. Okay. So you can do this. You can do this throughout. You can do some back testing, just going back several days and just kind of pick one and look at it and do this what if, just like we're doing right now. Okay. So let's scroll. I'm going to scroll forward. We'll start looking at candles. All right. Price is up here at 49,671. The next candle, price moves all the way down. It opens up and it shoots all the way down to 315. So it didn't get all the way down to the bottom here, but it shot down here close to the bottom. What we would look at here is what I would have looked at too is the prior day bottom. Looking at Thursday's bottom, that would have been another level of interest for me. But I'm just trying to get you comfortable here with just where we are on the outside edges. Okay. So right now, these two candles have traded in as low as this number down here, 49,325. It didn't come all the way down to the low of day. We would have had an order sitting down here at the low of day. It hadn't got there yet. So it's just still trading inside of this range. This green line here is telling me this is the low of this prior day. Well, guess where the wick came down to, and then it traded above it. Now look at where it's wicked down to again, and it's trading above it. So there is a lot of buying support that's happening right in this area currently after these 4 candles have been put in for the morning session. Okay, but right now we're inside day range, and the Bears are trying to push it down. Look, they've tried to push it down here. Buyers responded. They tried to push it down again. Buyers responded. So they're trading out this range right now. Okay. So again, the next candle doing the exact same thing, battling right here. But now they're pushing it down a little further. The bears still have a little bit more momentum because why? Because the price is below T line. The bears have a little bit more energy than the buyers do at this particular moment of trading. Okay, now let's see here. Okay, this was the close of the day here. This was the close of session. So it hung out here and finished the day right here. Okay. So on Range Trader, looking at the outside edges, this whole trading session, RTH session on May 19th, stayed inside the prior day range. In fact, it never even got close to the prior day high or to the prior day low. Then that's the reason why we look at the Range Trader, the stay in your lane chart, in addition to this, because this would have been some lower parts of the current bands of that range for that day. So are we still tracking together? I'm looking at your faces and I don't want you to go numb on me.
Yeah, I understand.
Perfect. Okay. So and what you're doing here is you're starting to learn the pattern and kind of recognizing what's going on that particular asset. So if you're trading the Dow, you want to really get good at this and start understanding, okay, hey, I'm trading today. We see price action is staying inside prior day range. And that means that we have a real good chance of trading the outside edges back to the middle. What happened here? We were in the middle. We started in the middle and it dipped down to the low down here and it did what? It traded back to the middle. It tried again to get down lower, and guess what it did? It traded back to the middle. So those are the things that we look for as what we're doing with trading those outside edges, the bid zone and offer zone, whether it's on the range trader and or the stay in your lane. Now, where like today's action, let's go back to today's action. Today's action, when we drop outside of the prior day range, we tend not to expect it to rotate back towards the middle because now it's now trending outside of yesterday's range to a new level. That's the reason why we say if it's outside day up or down, for new traders, it's probably best to just take a snow day and minimize your trading. Make sense? So that's kind of your criteria that says, okay, hey, I'm going to look at this, and if it's outside day up or down, then I'm going to just watch, or I'm going to trade sim, or I'm not going to really put my accounts up there because it's outside the normal of what my setup and my edge is that I trade. Now, on the range trader, when it does get down to a T line, the T line is a level that we look at. Okay, so on the range trader, we could say we'd put an order on the line. When it did touch the T line, it traded down below it a little while, but at the end of the day, it still traded back up to VWAP or up to the point of control. And that would have been a profitable trade off a T line, longing off a T line up to there, up to that prior day range.
So while I'm starting to get a feel for levels of entry and exit,
Yep.
what I'm not getting a feel for is where to put a stop loss and what to have as a profit target.
Okay. Well, and that all depends on what you're doing and what you're trading and what your daily risk budget is and all that kind of stuff. Okay. I can tell you what mine is, and that'll give you at least a snapshot as a thought. But at the end of the day, it's really based on what you trade. Okay. So what type of PA accounts or accounts, what size accounts are you using?
50,000 in my case.
Okay. What is your DRB, your daily risk budget?
Ask him about developing talk. I don't understand.
What's your daily risk budget? I didn't hear it. I'm sorry.
It's okay. He has to leave, but I have
Okay,
some.
Jared. All right. See you, man. So, Paul, what's your daily risk budget?
Well, I usually use the 250, though
Okay.
I never actually risk that much. Um, the I loved the edge trading with 3 contracts and using $50 per contract.
Okay.
I thought that was really helpful, and especially with MYM, a $50 stop loss gives you a lot of room for it to finally
Yeah,
go.
it gives you 100 points, right? Yeah, it gives you 100 points of range.
Yeah.
Yeah, no, so that's how I use mine, right? So that tells me I've got $150 at risk. And if my DRB is 250, which my DRB is 300, so I can take 2 of those type of trades through 3 contracts. And if it takes me out twice, all the way out at my full stop, then I'm done for the day.
Yeah.
Okay. Now, if I can mix and match it, I can do I can do 1 contract and lose that one for $50. Then I've got 5 more. I can do 6 of them for the day.
I was back testing a little bit, edge trading. I forget what asset it was, but it had 2 losses right off the chute, for $300 loss, hit the stop, and then it proceeded for the rest of the day to make $900.
Okay.
Which is actually leads me to one of my things I'm most interested in, and that is diversification.
Okay.
Because if I were trading another asset at the same time and it had wins, I would be looking at a total stop loss, not just a particular contract stop loss. And so I am interested in getting some counsel on other assets that would be good to use to diversify a trading portfolio.
Yeah. Yeah. What we would try to recommend is, get comfortable with practicing and learning the basics on one asset class. Then as you start to get your feet, then migrate, to expanding that. So that way, then when a particular asset is more in the appropriate setup, meaning it's down in the bid zone or up in the offer zone, where the Dow traded down in the zone, the MNQ and the MES were moving nicely up in their zones.
Right.
So yeah, that's definitely something as you start to really dial in your trading skills, that's the next level of expansion for sure.
You
But tell you
have
what,
some
I'm gonna
great
do. Let me do this. I'm gonna go ahead and stop recording on this so that you'll have it.